Hi, I am Adarshan, and in this video we are going to see about the journal entries of purchasing company in case of amalgamation. For purchase consideration payable, business purchase account data to liquidator of transfer company, and for taking of assets and liabilities, sundry assets account data to sundry liabilities to business purchase to P&L account to reserve account. For payment of purchase price, liquidator of transfer company account data to bank account to share capital account to securities premium account. For expenses of winding up paid by transfer company, the journal entry is general reserve account data to bank account. And for formation expenses paid, preliminary expenses account data to bank account. For payment of any debentures of transfer company, debentures account data to debentures account to bank account. And for payment to creditors of transfer company, creditors account data to bank account. For purchase consideration payable, business purchase account data to liquidator of transfer company. For assets and liabilities taken over, sundry assets account data, goodwill account data to sundry liabilities account to business purchase account to capital reserve account. Goodwill and capital reserve will be the balancing figure. For payment of purchase price, liquidator of selling company account data to bank account to share capital account to securities premium account to debentures account. For expenses of liquidation agreed to be paid by transfer company, goodwill account data to bank account. For formation expenses of transfer company, preliminary expenses account data to bank account. For statutory reserve of transfer company to be continued, amalgamation adjustment account data to statutory reserve account. For settlement of debenture holders or creditors of transfer company, debentures account data of transfer company, creditors account data of transfer company to debentures account to bank account. Now let's see an example. The following are the balance sheet of Sindhu and Bindu Limited as on 31st March 2020. Their liabilities and assets are given. Equity share capital 5 lakh and 3 lakh for Sindhu and Bindu. Preference share capital 2 lakh and 1 lakh. General reserve 1 lakh and 50,000. P&L account 50,000 and 30,000. 12% debentures 50,000 and 20,000. And current liabilities 3 lakh 1 lakh. And the assets are fixed assets 8 lakh 3 lakh 50,000. Current assets 4 lakh and 2 lakh 50,000. Sindhu Limited agreed to acquire Bindu Limited on the following terms. 11% preference shares will be issued to discharge the preference shares in Bindu Limited at 25% premium. Cash of rupees 2 per share will be paid and 1 equity share in Sindhu Limited will be issued at agreed value of rupees 13 per share for every equity share in Bindu Limited. Bindu Limited debentures are to be paid off in cash. Now let's see the purchase consideration and journal entries in the books of purchasing company, that is Sindhu Limited. The purchase consideration is preference shares 1,25,000, equity shares 3,90,000 and cash 60,000. So the total purchase consideration is 5,75,000. And now let's see the journal entries in the books of Sindhu Limited, that is the purchasing company. Business purchase account data rupees 5,75,000 to liquidator of B Limited rupees 5,75,000 being purchase consideration payable. The second entry is fixed assets account rupees 3,50,000, current assets account rupees 2,50,000, general reserve rupees 1,75,000 and it is the balancing figure. To debentures account 20,000, to current liabilities 1 lakh, to general reserve 50,000, to P&L account 30,000, to business purchase account rupees 5,75,000. The next entry is liquidator of B Limited account data 5,75,000 to 11% preference share capital 1 lakh, securities premium account 25,000, equity shares capital 3,90,000 to cash 60,000. And the final entry is 12% of debenture holders of B Limited to cash account 20,000. Let's see another example. The following is the balance sheet of A and B Limited. Equity share capital 50,000 and 30,000, 10% preference share capital 22,000 and 17,000, general reserve 5,000 and 2,500, statutory reserves, export profit reserve 3,000 and 2,000, investment allowance reserve 1,000 for B Limited, P&L account 7,000 and 5,000, 11% debentures 5,000 and 3,500, creditors 6,500 and 5,000. And on the asset side, buildings 25,000 and 15,500, machinery 32,500 and 17,000, furniture 5,750 and 3,500, debtors 28,500 and 24,800, cash at bank 7,250 and 5,200. And the additional information are 8 Limited takes over B Limited on 1st April 2019. Purchase consideration is discharged as follows: 3,500 equity shares of rupees 10 each at par to the equity shareholders of B Limited, 15% preference shares of rupees 100 each to discharge the preference shareholders of B Limited at 10% premium. The debentures of B Limited will be converted into equivalent number of debentures of A Limited. The statutory reserve of B Limited are to be maintained for 3 more years. Let's see the purchase consideration under net payment method. 3,500 equity shares at 10 rupees 35,000 and 170 preference shares at 110 rupees 18,700. So the total purchase consideration is 53,700. Now let's see the journal entries in the books of A Limited. Business purchase account data to liquidator of B Limited rupees 53,700. Buildings account data 15,500. Machinery account data 17,000. Furniture account data 3,500. Debtors account data 24,800. Cash at bank 5,200. General reserve 6,700, and it is the balancing figure. To general reserve account 2,500. To statutory reserve 3,000. To P&L 5,000. To debentures 3,500. To creditors 5,000. To business purchase 53,700. And the next entry is liquidator of B Limited account debtor 53,700. To equity share capital account 35,000. To preference share capital account 17,000. To securities premium account 1,700. And the last entry is 11% debentures of B Limited account debtor to debentures account rupees 3,500. Thank you.